Joining me today, I have Morgan Lekstrom, the president of NexGold. Morgan, thanks for joining us.
Thanks for having me.
So gold hitting all-time highs today. We see a disconnect, at least with the juniors and the price of gold. Morgan, please take out your crystal ball and tell us, when is capital going to start to flow into the junior names?
I'm going to take out that 8-ball. Magic 8-ball, tell me more. Now, look, we're not as tied to the gold price as the producers, right? We're a developing company. So when the equities start to trickle down is when what you're seeing and what we're seeing at these conferences is when those bigger companies are going, hey, we haven't done exploration in a very long time. Oh crap, we need something. Mm-hmm. So you're going to see those equities start to come back. I think the risk tolerances has changed for the gold space and for the commodity space. So in all honesty, I don't think risk tolerance has changed away from not investing. I just think it changed away from the commodity space. You're going to see massive shift in the geopolitical scene, especially with what BRICS is doing and potential settlement in the SWIFT system changing into gold. Frank will talk about that at one of his speeches, I'm sure. But that'll be a catalyst. Like you cannot continue down a path of no commodity development in the junior to mid-tier space without actual capital coming back to it. And it's starting to. We're seeing it. We're seeing capital come back. Some of us can raise money. We have a 3 million ounce gold deposit that's, a near-term catalyst to be built. So
I noticed that when we talk to some of the CEOs here, some of them are really depressed about how everything's going. It's kind of like, oh, it's really hard out there. I don't know why anybody invests in the space. And some of them, they kind of have your sort of attitude, like, I can go out and get money. There's great assets out there for me to go grab, and I'm going to go grab them. And that's the sense I'm getting from you.
Well, look, that's what we did with the merger of the two companies we just did to create NexGold. We went and grabbed a 3 million ounce federally permitted asset with a full builder team in place, finalizing provincial permitting. That completely went through its value, I call it the value destruction curve of, the bottom of Lassonde. We're coming out with feasibility, we're coming out with the right news flow, and we're aggressively trying to grow. We got the right backer for it. Now when you have the right sponsor, as Rick Rule would say, a sponsor is the most important part of a project nowadays, because that's the sponsor that makes sure it doesn't go broke. So yes, I'm sure there's a lot of sad people out there. I just haven't been long enough in this industry to be sad.
Is the sponsor here Sprott?
No, it's Frank Giustra.
Okay. Now you also have Sprott, though.
So we have Sprott Asset Management.
Okay. Oh, okay. Not Air.
And Extract Capital, a really large fund out of the U.S. that supports projects that they see a path forward on.
So you're having conversations with some of these investors, like Mr. Giustra, and I get the sense that they're sort of telling you that if there's assets out there that we think are really accretive, we'll back you.
Absolutely. It's an aggressive strategy. I like to say, look at Frank's track record during these types of markets when everyone else is capital crunched and scared. He puts the right teams together, we all go out and work our butts off. Yeah. And you go out and you acquire companies and assets that can build a mid-tier mining company. They've done it over and over and over. This is, I'd say, one of the most unique times in history where you're right, there's a lot of depression in the market, but there's a lot of really good assets that maybe the majors don't want, but the junior to mid-tiers can do really well off of.
So let's talk about your asset package for a second. Everything's in Ontario?
Yeah, so our main asset's in Northwestern Ontario near Dryden.
Okay, so that's the Goliath Gold Complex.
Yep.
What can you tell us about it?
3 million ounces, 2.1 in the M&I category, which means the high confidence category. We are federally permitted, which generally takes 5 to 7 years to get. Yeah. That's a huge milestone. We have an entire team of builders that are a part of our company. The chairman of the board is Jim Gowans, who used to be the president of Barrick, used to be the president of Placer, used to be the CEO of De Beers. Like, we have arguably one of the best mine building teams in the junior to mid-tier space. Now we're going to use that team on the project. And what's unique about our project is it's not in the middle of nowhere. We've got power lines that go through it, right near the mill, or through the mill area where it will be. We've got the Trans-Canada Highway. We've got infrastructure all around us. And we are just finalizing provincial permitting. So we're at that stage where any type of catalyst is a huge one.
So you guys did a pre-feasibility study in 2023. What can you tell us about that?
So at about 2150, this is a $650 million MPV asset. Obviously gold at 2550 makes it a multi-billion plus dollar MPV type asset. It's $335 million to build Canadian. So think about foreign exchange rates. That's actually a really positive thing for us. And it's a 6,500 ton per day CIL plant, 2 open pits, very much a simple build process. There's been a lot of failures in the mining space in Canada lately, but you can look at them. Our philosophy, you can look at them and you can go, what's the main culprit here? Our philosophy is not to go above that $400 million capex on any projects that we either have or acquire, for a simple reason of bite-sized financeable chunks that I don't need to break the bank to build.
So what's next that needs to be done in terms of development for the complex?
Feasibility out in Q1. Will be construction decision by Q3, engineering starting. We're in a growth pattern. We're also drilling 25,000 meters right now to make new discoveries. We have 65 kilometers of strike that has been wildly underexplored. Our entire exploration and land package, we've only explored and built 10% of it into a resource.
So what can you tell us about the exploration program? What are you guys planning to do?
So we're phasing it. It's a 25,000 meter program set into phases looking for new discoveries, but also about 40% of it will be looking for new discoveries and 60% of it will be expanding on the current resources, going down to depth, along strike. They're all wide open right now. So you have a very catalyst-driven plan alongside with the development plan that we have.
Okay, so Morgan, if we have any investors watching, or let's just say somebody who wants to put you on their watch list, what are they looking out for over the remainder of the year?
Look, I'm going to pull that back for 1 second. A key component is share structure. I mean, we really relaunched the company in July, 76 million shares out between Sprott, Frank, and Extract. That's 30% of the company. We have 60% of the company institutionally and tightly held. That's something to look for, because when re-ratings happen, you look for the people that are backing it and you look for a really strong share structure. So to catalyze onto that, we will have exploration results. We will have development results. We're an aggressive M&A company that is looking for majorly accretive assets. Look, this is something we've done before.
So what's your plan? Like 5 years from now, 10 years from now, what do you want NexGold to look like?
I like to say 5 years, because 10 years you don't know what the market's going to do. But our plan is in the next 4 to 5 years to either have a pipeline or be producing 200,000 to 500,000 ounces per year. I used to say 400, but I think we can do better.
All right, well, Morgan, I think you got a really interesting story, and I hope we can continue to chat in the future as you roll out your strategy.
Yeah, awesome. Thanks a lot. Appreciate it.